For many years, I oversaw the sustainability rating of the world's 2,000 largest companies. I learned a lot about what companies are doing in sustainability. And then after a time, I saw that not one of these companies was anywhere near sustainable, nor did they have any hope of becoming so. And by sustainable, I mean ending their harm of the environment and society. So it became clear that our economic and political systems were essentially saying to companies, harm the environment and society or go out of business. So I saw that system change was probably about 80% of the solution to sustainability, and at that time, getting about 0% of the attention.
I'm joined today by Frank Dixon, who's been interested in sustainability since his MBA, who joined one of the first ESG research firms, and having seen that ESG was not enough, has been working on system change ever since. Welcome, Frank. Thanks for joining me today.
Thank you. It's wonderful to be here.
Well, let's start with your career journey, because what I said above was probably a little bit of a summarized version of that. Can you talk us through what you studied before you grew up as well? And then take us through what ultimately brought you into ESG research and then something beyond.
Okay. Well, again, it's great to be here. Wonderful to be on your excellent podcast. I know you've had a lot of great people on it, so I'm very happy to be here. My journey, I'm from the US. I grew up in New Jersey and got interested in psychology. So at the age of 20, I moved to California and started attending UCLA to become a psychologist. But I got a job managing a very successful Xerox printing company. And so I decided my interest was more business than psychology. So I worked at that company for 7 years, and they did very well, became the largest of their type in the US. And I went back to school at nights to get a bachelor's degree in business and accounting. And then I was fortunate enough to get accepted to the Harvard Business School. So I moved back east to go to Boston, moved to Boston to go to HBS. Got an MBA. And after coming out of there, I really started thinking a lot about what I wanted to do with my career. From that age, from that time, I'd often been thinking about the economy, and I learned a lot about it in business school and undergrad. But somehow I felt I was learning about the positives and not so much the negatives. So I was interested in economic reform, but I also was really influenced by the work of Joseph Campbell, who spent his lifetime studying the world's religions, saying they're all basically saying the same thing. And the thesis of his life's work was to follow your bliss, or figure out what your authentic purpose is in life. You know, who are you? What really excites you at a deep level, and build your life around that. So I did a lot of thinking about that. And one day, and I think it was in 1994, I was at MIT and I heard Paul Hawken and Karl-Heinrich Robert speak. Karl-Heinrich Robert is the founder of The Natural Step. Paul Hawken is a famous sustainability author. And I really was inspired. From that point on, I knew that my life's mission was around sustainability. I just realized what I was really most interesting to me was helping to resolve the great challenges facing humanity. And so I got involved in sustainability. I learned The Natural Step. And then I found this excellent job at a company in New York called Innovest Strategic Value Advisors. They grew to become the largest ESG research firm in the world, usually number one rated. I became the head of research there and developed most of their research models and research procedures. And it was really an excellent education. For many years, I oversaw the sustainability rating of the world's 2,000 largest companies. I learned a lot about what companies are doing in sustainability. And then after a time, I saw that not one of these companies was anywhere near sustainable, nor did they have any hope of becoming so. And by sustainable, I mean ending their harm of the environment and society. I estimated that companies could profitably mitigate about 20% of their negative impacts. After that point, their costs would start to go up. If they continued, they'd put themselves out of business. So it became clear that our economic and political systems were essentially saying to companies, harm the environment and society or go out of business. So I saw that system change was probably about 80% of the solution to sustainability, and at that time, getting about 0% of the attention. And it's starting to get more attention now, but it's still much less than it should get, given how important it is. It's by far the most important sustainability issue.
Would you say there was a major learning curve for you? If you can just talk us through both the initial foray into this area and then having to kind of continuously retool, reskill as the area evolves quickly.
Yeah, definitely. Well, I was an ESG modeling expert, so I figured we could use investing to drive system change in exactly the same way that we were using it to drive sustainability. 25 years ago, almost no company had a sustainability strategy. Now nearly all of them do, mainly because ESG investors started shifting investments to sustainability leaders, and that incentivized them to implement sustainability. So I developed a model for rating companies on system change performance based on the idea that if we shift investments to system change leaders, it will incentivize companies to get involved in system change. But what I saw very quickly is that I needed to know a lot more about system change. The frame of reference for rating companies on ESG is their negative impacts. To give a company a score on system change, you need to know what that means overall. And at the highest level, it means human society operating in a sustainable form and the actions and changes needed to get from here to there. So I started to write a book, and I naively thought I could write a book about human system change and sustainability in a year. Wound up taking me about 8 years. I wrote the equivalent of about 10 books evolving human systems into sustainable forms. Now, with that framework, I'm in a much better position to be able to say what system change is. How do we give companies scores on it? I've developed models, more evolved models for giving companies ratings on it and working with others to transform ESG by shifting the focus from changing companies to changing systems.
Okay, let's just take that. So, transform ESG. So, we've had some debates around the state of ESG today in terms of many headwinds it's facing, labeling problems, perhaps misuse of the label. Where would you rate maybe this state of pushback? How robust is an ESG mindset, if we call it that?
I think the big picture answer to that question, from my perspective, is that throughout human history, all flawed systems have changed, usually by collapsing quickly. If you look at the rapid rate of growth of problems around the world, political chaos in the US, climate change, so many things growing exponentially, it seems that we've entered a phase of rapid system change. And if we don't voluntarily change our systems, they're going to continue to collapse further and create growing problems for business, investors, and society overall. During times, if you look historically, the pushback against ESG is symptomatic of what happens during periods of system change. There's a reversion to old ideas. The idea that pushback against ESG, pushback against DEI, the idea that we revert to old ideas that failed in the past, and that accelerates the decline because they fail again. So my company pioneered return enhancing ESG. The key issue with ESG is it financially relevant? That's all you need to know. If the answer is yes, then you must do it. Now, we're in a time where there's a lot of deception and public misunderstanding around ESG. I think all of the pushback is only going to be temporary because investors are not going to accept lower returns from ignoring financially relevant ESG issues. As our systems continue to decline and impacts grow, it's going to create more problems for investors and companies. So I think the pushback is only temporary, and it's symptomatic of our systems breaking down.
And moving in now to the meat of the system change discussion. So we've already used the term quite a lot. Can you define it for us and why this approach you think? I think what you've asked the question or made the point that SDG problems, which I describe as these big global goals, many of which are overlapping, have many intersections. Why do they need that approach?
Okay. Well, system change can mean anything. It can range from the individual all the way up to the whole Earth system. So the systems that are most relevant for corporate sustainability and responsible investing are the economic and political systems. Those are the systems that basically they make it more profitable for companies to cause SDG problems. These systems are the root causes. So if we don't address the root cause of why climate change and other SDG problems exist, we'll never solve them. We've been working hard on climate change for 20 years, and it's getting rapidly worse. Most companies, or many companies, have carbon mitigation strategies. It's not working because we're focusing on the symptom, green energy, and not looking at the cause. The cause is the economic and political systems that compel companies to emit greenhouse gases. So that's what system change means. We need to evolve our systems into forms where it's more profitable for companies to not harm the environment and society. Right now, their survival depends on causing harm. It's like the industry is based on a flawed premise. When we focus on changing companies, the implication is if they have a better climate change strategy or a better sustainability strategy, then they'll be able to get to sustainability. That's mostly not true. All those things are helpful. It's good to have mitigate your impacts to the greatest extent you can. But the main reason that companies are causing problems is because our systems compel them to. It's like we're going to puppets in a puppet show and trying to change the behavior of the puppets. We have to go behind the curtain and talk to the puppet masters. The puppet masters are the economic and political systems. The paradox in this situation is that we need the puppets. The corporate and financial sectors have probably the only segment of society that has the power to change systems. So we need them to go and change the systems that are controlling them. That's what SCI is all about. It's a more complex discussion. But basically, system change is 80% of the solution. We'll never come close to SDG achievement without doing that. I would say one thing you could also say that system change is closer to 100% of the solution because once it's more profitable for companies to not cause SDG problems, voluntary exhortations to lower your impacts won't be needed. Companies will automatically stop causing climate change and other SDG problems because that's how they'll maximize profits. They won't survive if they cause harm. Now they won't survive if they stop causing harm. Under sustainable systems, they won't survive if they cause harm. Now, of course, that's a very complex issue. The key question is how do we get from here to there?
It would be great to start initially in the side of risk, because why should an institutional investor be interested in what you're saying about system change? It does seem like you said a very broad and large scale change required. Can an institutional investor do anything to encourage system change? Can the companies do anything to encourage system change? Or is it to do with risk? If we don't pay attention to system change, we will see risks develop and worsen. So can you just tie it all to risk as well?
Yeah, definitely. Well, there's many benefits for investors to take system change into account when investing, and risk is probably the major one. So I'm working with Pensions for Purpose around helping them to look at system change. And one of the things that's happening in the pension fund community is doing better climate scenario analysis to try and better address climate change. They're calling climate change a systemic risk along with nature degradation and things like that. I would say that climate change is a symptomatic risk. The true systemic risk are the economic and political systems that create the risk in the first place. So if an investment strategy is not looking at changing those systems, it's not addressing the root causes, it can delay the inevitable by shifting your investments from brown to green companies. You'll delay the problems, but you're doing little to change the economic and political systems that are the root cause in the first place. So for pensions, and more people are encouraging pensions to go to government and lobby for more policy reform that makes it more profitable to not cause climate change. That's a pretty small lever. By far, the most powerful lever that the pensions have is, in addition to lobbying government themselves, what if they could get all the companies that they're invested in to go to government and lobby? They can do that pretty easily, actually. Just reward the companies that are lobbying government for policy reform and penalize the ones that aren't by overweighting the leaders. There's many reasons why you would do that, but when you take system change into account in your investment strategy, you have the first true full risk mitigation strategy. So it's the best mitigation approach. Also, you're going to be shifting to better managed companies who are going to make more money. You're going to be, can attract new investment, enhance your reputation, and also you'll get the highest sustainability benefits, which a lot of pension investees and others are interested in.
Let's stick with the gaps then. So where are the gaps currently in terms of system change and seeing it to be in a place where you want to see it?
Okay. Most relevant one for pensions is a practical way to drive system change. That's a gap and an opportunity. And then there's a bigger gap around how to frame up system change. So I'll address them both. There are a growing number of financial institutions that recognize the importance of system change and are looking for ways to use investing to drive it. The most common form of investing seeking to drive system change is to invest in green companies with the idea that that'll promote a green economy. And it will a little, but it's not addressing root causes, economic and political systems. Others are looking at using tools to assess portfolio-wide impacts of climate change and other SDG problems. That's helpful, but again, doesn't directly address root causes. Still, other approaches are looking at new financial instruments that maybe provide lower returns, but more benefits. Those are all looking at collaboration on a sector or regional level. Those are all good approaches, but the biggest approach, as far as I know, is not being implemented yet. It's also the easiest and the most powerful, and that is to do what ESG has proven to work for 25 years, work to a certain degree, and that is to begin giving companies ratings on system change performance. So expand ESG to include system change metrics and begin to shift investments based on that. It's the easiest because it's based on something that nearly all large asset managers already are doing, ESG investments. It's powerful because a lot of the system focused investing looks at specific parts of the capital markets like private equity, but every company can be rated on system change performance. So these SCI ratings can be used as an overlay on almost every type of fund. That enables almost the entire capital markets to be used to drive system change. So I think that's the biggest gap right there. And then the other gap in terms of framing up system change, the SDGs, donut economics, and other models try to define sustainable society. But I think what we need is more of an objective approach and one that talks about not only the end state, sustainable society, but how to get there. So I've got something called the Global System Change Framework. It uses the laws of nature to say what sustainable society looks like. These have controlled all life on Earth for 3.8 billion years and will continue to do so going forward. With that, we can say at a high level what absolutely is going to happen on Earth, regardless of what humans think, say, or do. And then we can define the systemic changes and other actions needed to get from here to there. So with that framework, then, and this is needed to give accurately rate companies on system change performance. Once we know what system change is overall, we can define the optimal corporate role in it, and aspects of that become metrics in SCI rating models.
I think we're treading onto my predictions for the future question already, but we will certainly return to that in a second. And then in terms of the reception that say investors give it, I mean, these are complex, interwoven, interconnected issues by definition. Do you find that it's resonating?
Yes. System change is becoming a hot topic now. There's a lot of different groups that are talking about it. The CEO of Pensions for Purpose ended their recent conference saying that we're going to focus a lot more on system change. So people understand it. I think that the main barrier is that it's so complex. You know, we're focused on changing companies. We can change a corporate strategy. How do you change a whole society? I mean, look at what's happening in the US. Try and imagine improving that political system there. It can seem impossible. So I think the key with SCI, and we use the same principles that we use to mainstream ESG. Our company was the first in the US to say you can make more money with ESG. By making it profitable, mainstream got involved. So somehow we have to find a way to make system change simple and profitable. So the simple is you can just give companies scores on their system change performance. That's not hard to do. And then what you do is you incentivize companies to begin to work on this very complex issue of system change. Really, all we're trying to do is get them in the room to discuss some of these complex issues. There are many experts out there with lots of good ideas. We can bring them in. And then the key really is to show them how they can make more money with it. Because if we help investors to reduce risk and increase returns by taking system change into account, then everything else is gravy. That's what SCI does. There's two main reasons why it enhances returns. First, management quality, proxy for management quality. Companies that understand this complex issue are going to be doing many things well. And the second one is to take systemic risks and opportunities that are currently not addressed by ESG or conventional financial analysis into account. There's a lot more to it, but if we make it easy and profitable, I think that's the way to get them involved. And many are looking at it now. I think it's only a matter of time before this form of investing takes off.
Connected with that, some of the discussions we're having, and I think the red habits resonating and how this is fundamental to portfolios and risk mitigation. And we've talked a lot about ESG becoming mainstream. It's not something that would be siloed, that would be treated differently. We shouldn't necessarily be led by separate professionals, separate sustainability heads, and would be firmly integrated into an investment function. Is that also your vision?
Yeah, well, I think the key issue, as I said earlier, is are these issues financially relevant? For many of them, obviously, yes. Do you have products that are appealing? Do you take good care of your employees to minimize your energy and materials costs? Do you have better stakeholder relations? They're hugely financially relevant. And so responsible investing is taking all financially relevant issues into account. And I think what's happening is that lots of problems are accelerating. So these are going to have increasingly negative financial impacts on investors and companies. As that occurs, they will be compelled to take this into account. Often ESG is criticized for being non-financial, but that's very misleading. Non-financial doesn't mean not financially relevant. Non-financial just means it doesn't show up on regular financial statements. But something can be highly financially relevant, and many of these issues are. So, yes, I do think that it's going to increasingly become just a standard component of responsible investing. And the biggest transition coming now, negative to positive screening was a big one. Even bigger is going to be shifting from company change to system change, because that's the solution. I mean, really, you could say that's almost the entire solution. And we're focusing, on something that's not going to work. It helps investors, it helps stakeholders to try and change companies. It's all good. It's provided a lot of benefits. The world would be a lot worse without ESG and corporate sustainability. But look at what's happening in the world. It's good, but not nearly good enough. What's missing? What's missing is system change. And a lot of people need to work on making that happen. Nobody has all the answers. I certainly wouldn't claim to, but there's a lot of people out there. And if we just put the attention and resources of the corporate and financial sectors on this issue, we can figure out how to do it in a way that transitions our systems in a minimally disruptive manner. If we do nothing, what's going to happen is that there will be a transition, because it's inevitable that systems that degrade the environment and society are going to change. There's no business or economy without the environment and society. So we can't continue to systematically degrade those and expect that it won't affect business. We're in a time of consequences now. So I think more and more the best option for companies is to take a seat at the table and figure out how to practically evolve these systems in a way that protects investors, their company, and society overall.
What does that actually look like? Because I think I'm still having a hard time understanding how that translates into concrete action. You mentioned a lot of people will have to be involved. It's not corporate actors, but who are those people? And government actors are not exactly sticky either. There's a lot of transitory aspect to that. We have short-term agendas that replace long-term agendas. When you say companies should engage in system change, what are they supposed to actually do in a concrete fashion?
Okay, great question. I think maybe an easy way to answer that would be to say, how do you give a company score on system change? What are we looking for? So in many ways, it's like ESG. We look at, do they have a system change strategy? Do they have goals? Do they have strategies for achieving them? Is there senior management commitment? Are people being held accountable? Have they identified systemic risks and opportunities? What are the key system change issues in their sector and society overall? System change is so complex that it can only be achieved through collaboration between all segments of society, business, government, and civil society. So part of the work of a company would be to add system change to their current sustainability strategy. And many companies are already doing this. A lot of things are done that could be called system change. They're just not using that term. For example, anytime a company collaborates at a sector level, that's system change, like Unilever Sustainable Food Lab. When companies lobby government for carbon pricing or other green regulations that make it more profitable for them to act responsibly, that's an example of system change. So it's already happening. We just need to kind of kick it into higher gear and basically, in a simple way, just get them in the room and say, what are the issues here? What is it about our systems that create a situation where I can only survive if I cause climate change? I don't want to cause climate change, but if I stop, I die. So I can't stop voluntarily. I can only go so far. How do we change that system? And probably, as I said, no one has all the answers, but there's a lot of great ideas and a lot of people who have spent their lifetime studying these issues. So if we start giving them some attention and get the corporate and financial sectors in support of implementing these solutions, it can make a big difference. It's a huge conversation. I'm really kind of greatly simplifying here. In the interest of time, I mean, I'm glad to go on more if you want, but
No, no,
it's a big question.
that gives a great sense. I suppose that gets to again some of the time frame that investors should have in mind. I mean, investors, I mentioned civil servants not always having a long-term time horizon. Investors and their officers may not have a long-term time horizon. Even corporate staff, we are increasingly managing to quarterly earnings and to shorter time horizons. So how could you make it pay in terms of focusing on this longer term, bigger, higher order issue? Like what's in it for the various parties to start to think this way?
Well, the long-term focused investors like pension funds are obviously the best candidates for system change because they need to be paying out 20, 30 years down the road. And climate change and other problems, they understand that's going to be a major threat to the economy and their ability to meet their obligations. So for investors with a longer term focus, getting involved in system change makes sense. However, the way to do it is to make it profitable right now, today, day one, you make more money with system change. How do you do that? The method that I described, there's a lot of intangible value being left on the table here. Just about any analyst would agree that management quality is the number one driver of stock price. How do you measure it? It's an intangible. Well, one way to do it is give companies a complex challenge. The main reason ESG leaders have outperformed is because they're better managed overall. System change is a far more complex challenge than just the ESG. So companies that see the importance of that and get involved are going to be doing many things well. And I would say that you're going to get alpha on day one from doing this. So make it profitable right now. There's not a conflict between system change and short-term investment returns. It'll be a strong source of alpha. That's what I did at Innovest for many years. When I developed their models, we were all about alpha. And MSCI bought our company. They're still doing that. I think one of the misnomers is kind of there's a conflict between shareholders and other stakeholders. That's not true up to about 20%. Beyond that, it is. But basically, the way we were measuring, we were giving companies scores on how well they were taking care of the environment and society. And our argument was they're better investments. So, how do you do a better job for shareholders? Do a better job for stakeholders. But that was only true up to 20% mitigation. Beyond that point, then there's a conflict between stakeholders and shareholders. That's a systemic problem. And the only way to solve that is through system change. So we can use the same investment strategies and get alpha, lower beta.
I'd like to just pivot to another topic that we discuss on this podcast a lot, which is around diversity. You mentioned contributing to society, to the environment. This industry is not necessarily as diverse as the society it represents. Any thoughts on the S part there of the ESG, the system change around equal opportunity? How does your research and work touch that?
Well, I think with all the environmental and social problems, the key issue is to look at root causes. What's the root cause? These problems, lack of diversity, didn't just show up. They're a reflection of our thoughts, the way we think, the way we see the world, and the systems that resulted from those worldviews. So there's a lot of great work being done around DEI, diversity. And I think to support that work and accelerate it, we should look at how economic and political systems create lack of diversity. How do they need to be changed to drive it? So like all the other problems, I think system change is key. I think one sad aspect of the pushback against DEI that you see in the US, for example, is that this is all, again, symptomatic of system collapse. During times of system breakdown, which I believe we're in now, there's a reversion to old ideas. It was very enlightened to kind of try and have the workforce match the diversity of society. How can that be a negative thing? The idea of that's disadvantaging white people is just some kind of rationalization. What about the people that were disadvantaged for generations? Don't they have a right to equality and fair treatment? So the pushback is not rational. Racism has kind of been kept in check. The racists had to hide. Now in our heightened political climate, it's coming out of the closet again. So I think the pushback against DEI is some of the just an example of more of the sad things that are happening in the US right now. And we're going to find a way through it, I think. Pain's the great teacher. So if we don't figure out how to get along with each other and treat other people with respect, we're going to learn the hard way to do that. I think we're getting some of the hard way now.
And I suppose there is no unified idea as to what a well organized, well working system looks like. I mean, you cited the pushback
Oh,
against DEI as an example of a breakdown of a system or a system not working well, whereby some would suggest that they're doing that to protect the system. So I suppose that there is no perfect model for what the system should look like. Is that correct?
well, maybe amongst human models, I wouldn't even say no to that because indigenous often did figure it out. But there is a fantastic model for what the system should look like. And we're all walking around in one. For 3.8 billion years, nature's been controlling all life on Earth and will continue to do so going forward. So look at healthy natural systems. What are the qualities that we see there? Of course, diversity, implied equality, seeking balance, not growth, producing no waste, living off of renewable resources, decentralizing production and governance, equally valuing generations and species. We've got the model, and that's an objective reality framework. We know what's going to happen on Earth. For humans to stay here, we have to align our systems with the laws of nature. Diversity is just one part of it. Equality is another implied law of nature. So, yeah, I think there's a fantastic model for it. And it's going to happen. That's absolutely guaranteed unless we get hit by an asteroid. And even then it would happen. So we've got the framework. There is the model. Just how do we get there? It's difficult given where we are right now. We've got a long way to go, but pain's the great teacher. So if we don't get there voluntarily, sadly, we'll get there involuntarily.
I love it. Well, let's move to a few closing questions. Looking back at your career so far, which has clearly spanned tremendous growth in the ESG concept, its adoption, it's even gone as far as having a pushback, which maybe is a sign of maturity. Were there any key people across that time, any mentors to you, anyone that really had a pivotal effect on how you saw the world?
Yeah, definitely. Well, of course, I mentioned some already. Joseph Campbell, his work around following your bliss and studying the world's religions, I was deeply influenced by him. Then Paul Hawken and Carl Henrik Robert, Carl Henrik, the founder of The Natural Step, Ray Anderson, the CEO of Interface Carpets, one of the first companies to really embrace the natural step. They all had a large influence on me. One of the most common ones is Einstein and his famous quote of, "We need to think at a higher level to solve our most complex challenges." He influenced me. My whole kind of books and writing is about that because the root cause of all of our problems is reductionism. That's what produces our systems, thinking we're separate from each other in nature. The solution, as Einstein said, is higher level whole system thinking, which thinking as if we're one whole system, which we are in reality. So how do we start to behave that way? He's inspired me, and also the Dalai Lama is inspirational to me.
I'd love to ask also about any words of wisdom or a creed or motto, besides this deep commitment to system change and proselytizing at that point. Anything that you have captured from these mentors or otherwise over the years that you can leave us with?
Yeah. Well, the key thing that I've learned is, and I'm still learning it, I'm not perfect at it, is to try and treat everybody with kindness and respect. The Dalai Lama says the three most important things are kindness, kindness, and kindness. So doing that, and a big part of that is to really honor and respect other people's rights to think and do what they believe. Oftentimes in the past, if people weren't agreeing with my ideas, I would kind of take it personally, even though I knew I was on the side of the facts and the logic, but I was dishonoring their right to see the world the way that they want. That doesn't mean to condone racism or disrespect of women or anything like that. I absolutely do not. But kind of putting people down for their views is not going to change them. And that's a big cause of the problems in the world. And plus, people hold those negative views because they were treated poorly in the first place, probably. So treating people well and honoring their right to think the way they do, I think is how we kind of get beyond this great divide. I mean, we've got another great civil war in the US, the war between the conservatives and liberals. We haven't seen this kind of division since the Civil War, I think. So getting along with each other. You had mentioned something earlier about if I was going to give some advice to my younger self. What I would say is let go of the judgment. As a high achiever, I often would be very tough on myself and put myself down for not doing this right or that. And as I've gotten older, I realized you just have to let that go and don't live your life to kind of do what other people think is right. Find out who you are in your heart. What is your life all about? And do that. And I think for many people, me especially, the main thing is to live a life of service. Helping other people is what leads to the most fulfilling and successful life for many people. So that would be my words of wisdom. Live a life of service, honor other people's rights to think whatever they want, even if you disagree with it.
Well, thank you so much, Frank. Thank you for forcing us out of some, let's say, intellectual comfort zones here, because we do tend to focus maybe on areas where we have a semblance of control, even if that control is not particularly effectual. And I'm thinking of some of the typical paths to ESG enforcement, or at least action around things like stewardship, engagement, company focus. And I think your encouragement to step beyond that and giving us some tools with which to do that, and some of the words with which to do that, is a very powerful step to bring more of us along that journey. So thank you so much for coming here and sharing your insights with us.
Well, thank you very much, Ethan. It was a pleasure speaking with you. Thanks for having me on your podcast.
I'm Ethan Devitt. Thank you for listening to our 50 Faces Focus podcast. If you liked what you heard and would like to tune in to hear more inspiring professionals and their journeys, please subscribe on Apple Podcasts or wherever you get your podcasts.
This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.